Alright, strategic to tactical, back again, do the market review. I'll go over the S&P, the Nasdaq, cover the Russell, and also something I've been following is the junk bond index. So it's the 7th of September, and we'll start off with the S&P 500. I got a daily chart here of the S&P. So we left off last week where we were basically had we had a sort of a sideways week prior, although we closed up at the highs of the prior week, and we were looking for resistance in the S&P at 2005, and then we were looking at some support from the weekly low of around 1990. And as you can tell, the market took out that 2005 actually on Monday by a point, and then sold off pretty hard. Another key level we were sort of also keying on here is the 8-day. Is the market hadn't closed below the 8-day since the lows of the first week of August. So that's what we were going into the week. Well, we took out those highs, but the market just again didn't show any momentum, didn't really have the oomph. And again, some of the issues that we talked about prior, again, it seemed to be a not the best risk-reward type of trade going on. Up in here, we had these bearish market extreme indicator basically telling us that. Although it actually worked it off on Monday, where and basically the main reason that was is because the market had been so strong and really didn't pull in, so it kind of negated this bit of sort of bearishness, if you will. But we did have a pause, at least of almost about 5-day pause here, and actually even further, because all we did all week is take out the high and then come back in, take out the high, come back in, and it was very frustrating if you were trying to buy breakouts as the market. Every time a breakout happened, the market would actually sort of go in your face. So the wind was always in your face, never at your back. And then maybe Friday had the chance to, figured maybe they're going to take it lower. With that bearish report, whatever that jobs number, but they tried a couple times and just couldn't do it, and they took out the prior day's low. They even went right to that 1990 level, and then that was that pretty key support, and then they bounced it, closed right on the highs. We worked off some of this VIX bearishness here on the oscillator. Actually went all the way to a bullish, above the bullish band here on Friday, and we've worked off some of the overbought condition in the McClellan oscillator. So believe it or not, Friday actually gave us a bit of a VIX bullish bar. So and that's basically because of the we peaked above this this band up in here in the VIX oscillator. That we had a positive close, and so now what I'm looking for going into this next week is to see if tomorrow or early in the week we get to you do get potentially some momentum breakout above this 2011 level from Thursday's high. So that's the key level. I think, again, I'm hoping for a either way, more of a little little more action, if you will, or some than this sideways, just take out the high and crash, take out the low and rally kind of frustrating trade that we've had over the last week or two. There's definitely been some pockets of strength and weakness. So the money is moving around into it's basically being taken out of one sector, put in the other. So kind of at the end of the day, it's sort of a net effect of zero, right? So that's why we're just sort of flipping and flopping around. So again, we'll see how things go. If they do take out a level and then that level holds, and then we actually get a day or two trade higher, or even a trade below Friday's low, the 1990, and then we get a little bit of pull in here. Either way, I mean, just would be nice for something to happen. But I think right now the pain trade is what it is. It's the pain trade is to not pull in, and again not break out, and that's what's causing most traders pain, and that's what the market likes to do. So we did close below the 8-day on Thursday, but again that Friday we went right back above it, so that kind of negates that, at least for now. And we'll see, that we have these levels that we're going to key off of, and that's all we have really to focus on. Let's quickly go over the Nasdaq. Sort of same situation, had been a bit stronger, and kind of led this move higher. Although the last couple of days actually has been a little bit weaker relative to the S&P. But we do have that nice reversal bar on Friday. And again, we'll see. The key here is going to be Wednesday's high in the composite of around 46.10, and the key support is going to be around 45.40, which is also the prior week's low. So and that's what we have in the Nasdaq. That's what we have to key off of. I mean, again, I think a very bullish sort of situation. I mean, especially we were in overbought territory and the market didn't pull in. It just kind of been trading sideways, working off that overbought condition. So if you've just been holding on and in the right stocks, it's been working out well for you. We'll go over the Russell if I can find it in this mess. Here it is. And again, this has been the laggard. This is what all the bears keep pointing their fingers at. Like, look at the Russell, look at the Russell, and okay, we broke this this sort of aggressive uptrend that we've had. But then even the same thing, Friday we kind of had that reversal bar. We'll see if they can do anything with it tomorrow or Tuesday. We keep making higher highs and have been making higher lows until Friday, but again, we'll key off of this kind of reversal bar on Friday. So and the Russell, definitely the support that needs to hold is in 115 in the Russell 2000 ETF. But again, I think the overall market's sort of gonna obviously they're highly correlated, so we'll see one thing or the other. But again, we may see early, if we see some weakness in any one of the indices, and it might be in this one, that might be a clue as to where we may end up going. The resistance that we need to get back above is in the Russell ETF is roughly 118. And if we could do that, that basically kind of will negate this down move, especially if we can get back above, back to these highs here, around 120, 120-ish, 121. So we'll see if anything happens there this week. Another another index I've been following is the junk bond index, because this kind of led the move lower back in late July or early August, and also led the equity market higher when it bounced. It also showed when this is a dividend payment, so this gap here kind of negates. But we did get a kind of sell-off from there, actually quite substantially on Thursday, and that actually we saw that weakness on Thursday, and I think part of that was, the little bit of a rout in the bond market. If you look at the long-term treasuries, kind of had a pretty harsh move as well. So, and that kind of spilt over on the equities, but again, the equities kind of shrugged it off at the end of the day on Friday. Really on Friday, they kind of shrugged it off, and then I guess they, now they're focusing. Oh, okay, the market, the economy's weak. All right, so what? We'll get the Fed to bail us out again. So, either way, equities right now are the definitely have that bullish bias, but we'll keep an eye on this again. If this continues to leak lower, it may sort of be a drag on equities, and it's just something to take a look at. Or if this, really when you look at this pretty sharp recovery, a 38.2% retracement, and really that's not even there because there's a dividend payment here, so this is really a bit higher than that. It isn't too bad of a deal either, but at some point here it needs to then bounce again and try for these highs at some point. And that's all I got on the really major indices. It's gonna kind of be a wait and see what the market wants to do. I'm not a crystal ball reader. We'll kind of see, how we open tomorrow, and that may, I think, the early morning action will sort of tell us. I mean, futures are down about 1.5 here on Sunday night. It could be one of those, we gap 10 points lower tomorrow, and Friday is just basically a complete false, a reversal. So, but I think, the early morning trade will tell which direction, especially if we break the support or resistance from last week. And again, the key thing here is to see if there's any follow through to any type of breakout, or it just reverses like it did the last couple weeks, and then we may do that for a couple days or weeks to really frustrate everyone. So